What's up, traders? Welcome back to Golden Forex YouTube channel. I'm very excited to bring you another brand new video. Now in today's video, we'll be talking about standard deviation projections using the Asian range. So, without wasting much time, let's dive right into it. Alright, now here we are on a price chart, and it's the Euro USD chart set to 15 minutes, and since we'll be using the Asian range for the standard deviation projection, we need to know when the Asian range begins and where it ends. And from the previous video, we know that the Asian session starts at 8 p.m. to 12 a.m. New York local time. Once we have that range defined, we note the low, which can be labeled as Asian range low, and the high, which can be labeled as Asian range high. Now for the next step, we could use whatever tool we're comfortable with. It could be a Fibonacci tool, or we could use a rectangle to project the deviations from high to low. And in this example, we'll use the rectangle. So now we pick the highest high and the lowest low inside the Asian range, and we project that range below the low and do the same projection above the high. So when we project below, we have one standard deviation, and above we have one standard deviation, two standard deviation, three standard deviation, four standard deviation, and five standard deviation, which it goes beyond a little bit. So now we are going to blend in time and price. First, we deal with time, and from the previous video we know that the London Open kill zone usually creates the low of day when bullish. And during that time we were at the 0.5 standard deviation, but that alone is not enough. So now price comes in, and if you look a little to left, you'll see that there's a fair value gap which gets filled at a specific time, the London Open kill zone, and that tells us that it's unlikely to go beyond the 0.5 Asian range standard deviation. And in the previous video, we also talked about the New York Open kill zone, which will either reverse or continue with the London Open distribution. And as we can see, the draw on liquidity, which was the previous day's high right here, had not been traded to yet. So it would be reasonable to expect the New York session to continue in distribution above the previous day's high. And we also talked about how the London close kill zone will usually create the high of day when bullish. And as per this example, we can see that at 5 standard deviation, we were inside the London close kill zone. Now let's take a look at another example.
Now in this example, we'll be using the index market, and this particular chart is the US 30 price chart. And before we start, here are a few things you should probably know. The kill zones for the indices like NAS 100, S&P 500, and the US 30 are slightly different from that of the Forex market. So for the Asian session, it's still the same as 8 p.m. to 12 a.m. New York local time. And the London session, it's still 2 a.m. to 5 a.m. And the New York session has been divided into two sessions, which is the morning session and the afternoon session. Now the morning session, which is the AM session, begins at 9:30 a.m. to 12 o'clock noon. And the PM session, which is the afternoon session, begins at 1:30 p.m. and ends at 3 p.m. New York local time. So with that out of the way, let's begin our Asian range projections. Now, with our Asian range noted right here, we have the Asian range low and the Asian range high. And now we use our rectangle to define our Asian range from high to low. And we project above the Asian range high and below the Asian range low. So when we project below the Asian range low, we have one standard deviation, two standard deviation, and when we project above the Asian range high, we have one standard deviation, two standard deviation, three standard deviation, and four standard deviation, with a high of the day at 3.5 standard deviation, which goes above it a little bit. Now with the index market, our primary focus is going to be the AM session and the PM session. And now using time and price, we can see that during the morning session, we came to a 1.5 standard deviation. And if you look a little to the left, you can see that there was a rejection block around the 1.5 standard deviation, which always provides a strong confluence that we are likely going to reverse, which we do at the AM session at the rejection block around the 1.5 standard deviation. And from there rally to a 3.5 standard deviation, which occurred during the PM or afternoon session of the US stock market. And we can add a confluence of swing projection using this high and this low for a symmetrical price swing projected above this high. Now, what that means is just a measured move from this high to this low projected above this high, getting us a symmetrical price swing at the 3.5 standard deviation at a time of the PM session or afternoon session of the US index market. And if this is the first time you're hearing the symmetrical price swing and want to learn more about it, you can go to ICT's YouTube channel, and I think the video's name is Swing Projections for Target or something like that. I'll search for it and link that video down below so you can familiarize yourself with swing projections and symmetrical price swings.
So when it comes to using the Asian range standard deviation, time and price are very essential to help guide you in knowing which deviation is likely to hold. And with that said, this will be the end of this video. Now, if you found something useful in this video, please leave a like and also comment down below. And if you're not already receiving updates, do well to subscribe and turn on the bell to stay updated.
Thank you for watching.
Stay tuned for scenes from our next episode.